are pivot points, and what do you look for pivot points? So very simply, pivot points are where the market kind of hits a point and then it rejects and turns around. So, we could call this right here on this 5-minute chart the first pivot point, and then it moves all the way down, right? And we could see this is in a downward move, low compression there, no big deal. And it stops here and turns around, and then really, I guess this would be the pivot point. Not I guess, I mean, I guess it's my job to know. This is the next pivot point, and it turns around right here, makes another pivot point, and then pulls up over here and makes another pivot point. And it doesn't have to be this long or dramatic. It's just that it's a consolidating market, and I'm trying to find pivot points for you. But it could happen in the matter of 2 or 3 bars, that it makes a pivot point. But the idea of a pivot point is that it rejects the direction it's going. It turns around and heads the other way. That's the short of the long. And you always consider the highest point of the bar. You don't worry about the body. If it's got a big tail and the tail ends there, that's where the pivot point ends. So when you're figuring pivot points, create a live account first. I'm going 18. Let's bunch it. Okay, I hope you guys are listening. If you're looking for pivot points, you always consider the tail. It's not you don't worry about the body. So right here, the tail is the highest. Boom, that's the pivot point. Drops right back down here. The tail is the lowest. That's the pivot point. And so that's like the first step in reading a chart is just understanding what a pivot point is and where things spin around. So then you want to think about when to trade and how to do it, and understanding the market. So you have to understand that the market has 3 attitudes, and one attitude is it's trending up. The other attitude is it's trending down. And then the third attitude is that it's consolidating, right? And some people can term it like a compression and expansion, but really, it's a trend, a consolidation, a trend. So to define a trend, well, actually, first off, where people get hurt in the market is where the market starts consolidating, like right here, right? You see where my cursor is going, and it's creating this little bunch, and nobody knows where it's going, and they're trying to make money in this area. And this is a 5-minute chart, but if you looked at the daily chart, you could see that sort of area over a long period of time, and then you're just getting chopped up in that area. So you need to really figure out where it is you want to place your trades. And all the money's made in these trends, in these expansions. And that's where you're looking to make the money. You understand? Well, rhetorical question. I strike that. I'm just trying to think of what I'm doing while we're talking. Oh, okay. I'm sorry, I'm getting a little distracted also. Hold on. Thanks for bearing with me. So anyway, you want to make your money, on these trends. You want to try to avoid trading in this consolidation, and this is where most traders make their money in these expansion and contractions. So that's what we're looking for. We're looking for those moves. We're trying to keep out of trading in the consolidations. And I mean, it's pretty simple to see the difference between a market trending up and a market's consolidating, right? So pretty much you would go like this and say, hey, that baby's consolidating. You see those two lines? That baby's consolidating right there. Let's get rid of some of the other rhetoric so that you can see cleanly. So this is consolidating right here, and you want to try to avoid trading inside of that. That's where you get hurt. And if you've watched over the past few days, we've just watched these breakouts, and we're trying to get ourselves involved with breakouts in addition to other trades, but we're getting involved. This is another consolidation, really, right here, right, and then. Sure, there's a breakout right there, and we want to get ourselves involved with that breakout that moves to the downside. So, it's easy to identify compression, and then you want to be able to identify uptrends and downtrends. So, for something to be an uptrend, which we're not seeing here, that we'll probably see it better on a 30-minute chart. It's gotta be making higher highs and higher lows, which is hard to wrap your head around at first, but when you look at it, you'll understand. Okay, so follow my cursor. Here's a low, right? And then it pushes up and it makes this high right here. And then it turns around and comes down and it makes a low right there. And then it pushes up again and makes that high. That's a trend, right? Here's a low, higher high, higher low, higher high. And that's how the market moves. It kind of moves up like in a staircase, doesn't move straight up, doesn't shoot straight up, except when you get stocks that help people build websites or chat channels. But a normal market moves up, comes down, moves up, all right, makes a low, a higher high, higher low. This low is higher than this low, a higher low, then makes a higher high. This high is higher than this high, and then comes down. This is a low right here, and this low is higher than the previous low. And I know this is kind of tedious, but I just want to make it clear for everybody. And it pushes up, makes a higher high, and then trades down and makes a higher low. And here's another higher high, and here's another higher low. And this baby is just continuing in an uptrend. And that's something we want to get involved with, right? We're going to take a trade down here, and we want to catch a trend young and then just follow it up and ride it up and ride it up. And right here, it makes a higher high, and then it makes this really strange low, So you're backing off and you're saying, uh-oh. So if we were doing our trades, we'd be putting our stops right under the low because we know that if it makes a lower low, the trend is over. And it would knock us out right here, and we'd say, hey, the trend's over. And then it does this little nonsense, consolidates, does an inside bar, pops up, makes a higher high and a higher low. And this low right here is higher than this low. I mean, it's even higher than this low, but we consider this low. And then it makes a higher high and a higher low. And it's still in an uptrend at this point. And then at this point, the trend just changed. We're not in that uptrend anymore. And we're saying, hey, something might be happening. Let's put a stop here. Yet let's protect ourselves. And then it makes a lower low and a lower high. And the trend just changed. It just became a downtrend on this market. And then a lower low, lower high, lower low. So that's what's going on right now. We just moved into a downtrend on the 30-second chart. And what's interesting is we can be in a downtrend on the 30-second chart, but we can be in an uptrend on the 1 minute, 2 minute, and 5 minute. And that's why I look at them, because you can see what's going on inside the bar. And yeah, you can make trading decisions like that. But that's what this is telling us. And it's really important that you can identify trends, compression trends. And that's what you catch. And you'd be surprised how many people have a hard time just understanding that and be able to look at the market and say, how's it trending? And we use that same theory and philosophy on momentum, or at least I do, right? So here's a high, comes down, makes a low, pops up, makes a lower high, comes down, makes a lower low, lower high, lower low, lower high, lower low, lower high, and it's trending down. I mean, yeah, Pretty simple, easy concept. Trending down, trending up, right? And you'll see that. Well, I guess we went over it. Here's the uptrend. Here's the downtrend. So yeah, that's simple. But you have to. I mean, that's it. That's reading a market. You need to know the three stages of in the market. And how you identify the compression is. Let me look for a little bit of a compression. That's actually just a good trend right there. Um, I want to find a compression after. Okay, here's compression. We have a low. We make a higher high. Just follow my cursor. We make a higher low. We make a higher high. We're in compression. We're in an uptrend. We make a higher low. We make a lower high. Right. First indication that something's changing. We make a lower low. We're not in a downtrend yet because we need a lower high and then another lower low. We make a lower high, good indication that we're heading into a downtrend. We make pretty much an equal low. We could call it a low low, but I'd say it's an equal low. And then we make a higher high. And then we make a higher low, but we make a lower low. So we're actually getting trapped inside this area right here. Yes, savvy? And that is how you identify compression, because we have a high here and a high here, and everything inside is just contained in there. And we really don't want to start trading in here. We want to wait until we break out right up here. So we have this strong push up, test of that resistance, a pullback, and then a bang, break right through, and the trend begins again. Right, here's our low, here's our high, here's another low right there. Or you could even just say that this is one run, so that's our high. This is our low. We made another high right here, where my crosshairs are. We made another low, and we entered an uptrend, and we try to play that. So that's the importance of pivots, because when you understand where a pivot is, then you can understand how a compression starts building, and then where trends go. So when you look at the chart, you just want to identify what stage of the chart are we in. If I'm trying to move this over. Come on, get over. If we open up the chart and we're come on, come on, come on. Yeah, if we open up the chart, or we wake up in the morning and this is what we see in the market, we know that the market is in compression right now. And it gives us our opinion, and basically we're like, hey, we're neutral with this market. If we open the chart and we see this range, it's getting too hard to move the chart. If we open the chart and we see this area right here, we wake up and we say, hey, it looks like we're in an uptrend. I see nothing there to make me think that the trend is going to start. And, I'm happy that we're in an uptrend. So that's basically it, man. That's like the short of the long of trends and compressions in this complex industry that we call trading. If you could look at that and pick out an uptrend and a downtrend, then you're beginning to read a chart comfortably. Am I coming through? Did everybody catch all of that? And do we have questions? Or was that a lesson in futility? Do I quiz everybody? I just did it on my other account. Is anybody out there?